So how would you feel if you woke up one day and they said anybody earning less than $150,000 a year is not going to pay any tax? That sounds great. And that is exactly what Lutnick, Secretary Lutnick of the Commerce Department, proposed the other day on one of these Puckney Head programs. So as a tax professional, I immediately start thinking about what does that mean, really? Who does that affect? How many people does it affect? How much of an effect does it have? And all these kinds of things. So I started diving into the data with the IRS, and I'm going to walk you through how it all shakes out and whether this is feasible at all or not. Let's get into it. So here is Lutnick on CBS saying that is Trump's goal is no tax on anybody who makes less than $150,000. And that sounds wonderful, right? Who wouldn't want that? Devil's in the details, right? Is this tax cut financially viable? Will this have an impact on the deficit? Does that really mean no taxes, or is there some file grant? And the answer there is yes. Breaking down the numbers, who pays what? And for this, the IRS has a publication that they put out every year or so. It's the Statistical Office Department of the IRS called the SOI, and they publish different reports. The most common report is the one for individuals, and that's the one that's updated the most frequently. And here's the most recent one from, I guess, January of 2025. It's on the 2022 tax year. So if we go to page 30 of this 433 page report, we can find individual income tax returns, number of returns, AGI, capital gains, yada. And they break it out by size of adjusted gross income. And that's what we need here, because when they say no taxes on $150,000 of earnings, they're going to be talking about adjusted gross income, most likely. That's the number at the bottom of page 1 of your 1040 tax return. That's the kind of starting point at which they start to assess tax. So it's adjusted gross earning, standard deduction, qualified business income deduction, taxable income, subtracting all those things, and then whatever the tax is based on that. But AGI is the starting point for all those calculations. So they break it up by 14 different categories. Under $1, meaning that there was a net operating loss, 1 to 10,000, 10 to 20,000, and on. So what I did is I took this data and I put it into a spreadsheet so it was actually usable. And here's the data from that. And I made a chart basically of the cumulative tax and the cumulative people filing of these income brackets. And so 150,000 does not line up exactly with the IRS data because they bucket it to 1 to 200,000. So I just get the midpoint and went from there basically. So we're at this intersection level right here. So the blue line is the number of tax returns that are filed. So total, there was about 161 million tax returns filed. 84% of them were in that $150,000 or less of adjusted gross income. And then of the income tax collected from all those, the total was about 2 trillion, a little bit over 2 trillion. And about 18% were on this red line. 18% of the total tax collected falls under those 84% of tax returns. So 84% of the taxpayers are paying 18% of the tax. Okay. And it gets a little squirrely because if you're in this under 50,000 range, then on average, your tax rate is negative because there's refundable tax credits, mostly for children, earned income credits, child tax credit, those kinds of things. And so only after AGI hits 50,000 do people become on net a taxpayer instead of a tax receiver. What happens to those people? Do they still get credits? I don't know. These are vague suggestions at best from the administration here. So the question becomes, what impact would this have? $2 trillion back in 2022. It was like 2.033. Of the $2 trillion, 370 billion was in this 150K and under range. Okay. If they were to eliminate the collection of all these taxes, then that would be $370 billion less that is going into the federal government in order to pay for spending. And, that starts to beg the question. It's like, what impact will that have? And this is 2022 data for 2025, 26. Let's round up a little bit with inflation and everything. Let's say $400 billion is a nice round number. Okay. So can we cut $400 billion from federal tax collection? Will that work at all? Maybe. It's been really interesting over these past couple months. I guess, I don't even know, it's been 2 months, almost 2 months. So let's say 7 weeks. And if we go to the World Debt Clock page, they say that Doge has saved Americans $200 billion already. Now, it's not exactly clear what the real effect of that is. So yes, people have been fired. We know that. Yes, aid programs have been cut. We know that. Whether they're actual aid or AID, things that maybe the government should be doing in the first place, whatever. So we know that part there have been actions taken care of. But on the other hand, yesterday, the Congress passed a continuing resolution funding the government at the same levels that it has been funded at for the last year or two. So if Congress keeps putting the money in and then these cuts are happening, is that actually a tax cut? It's not really clear. So, that should be determined. But let's give them the benefit of the doubt. Let's say, okay, $200 billion of spending was reduced, and that creates $200 billion worth of room to keep the same deficit. Now, is that the goal, keeping the same deficit? Debatable. Trump ran significantly on reducing the deficit and reducing the debt as a whole as well. And if we cut spending and cut taxes at the same time, then the deficit remains constant and it just shifts down a little bit, but the debt remains the same and the debt keeps growing at the same rate. So is that the actual policy goal? To be determined, right? But fundamentally, could the government, quote unquote, afford to not bring in this 370 or $400 billion? Probably. So that is a point in the proposal's favor. Now, again, open question, what to do with all these people that have been getting refunds? Do they continue to get refunds? Does it just go to zero? We don't know, because the earned income credit and child tax credit are federal transfer payments. So this is a welfare system that pays out to people even if they haven't paid in. And if that were to continue, then there would need to be some kind of filing process in order for them to continue to get those benefits. And so that does not mean that you wouldn't have to file tax returns necessarily. It just means you might not have to pay. Obviously, filing the return is not as burdensome as actually paying tax, but it's still an expense, and it's whether it's in time or money or what have you. It's not, when people hear these headlines, I get the impression that people think it's a magic wand and they're just like, oh, things just go away. No, things aren't going to go away. The payment might go away, but we still need some kind of checking system or reporting system in order to make sure that people get what they're entitled to or don't have to pay things that they don't have to pay. So that's going to continue. And what this also doesn't talk about is payroll taxes. In 2025, the Social Security cap is about $176,000. That means people earning more than $176,000 are not paying in any extra into Social Security. Now, Medicare continues to get taxed for all levels of earned income, but the Social Security part, which is the largest part, 12.9%, is going to be primarily paid by the same people who would have this income tax abatement, because 150,000 is pretty close to that $176,000 cap. So the differential there of people making 150 to 176 is not that big. And the bottom line there is that people earning $150,000 and less are still going to be taxed for Social Security and Medicare. So those payroll taxes are going to remain in there. So you're not going to get your whole paycheck. If you are earning $30 an hour and whatever your paycheck gross pay is, that's not going to be the number at the bottom, because you're still going to be paying payroll tax and you're still going to be paying into whatever benefits program that you might have, which is a whole other topic of how the tax code is written preferentially to not penalize businesses from providing benefits, and does penalize individuals because of the standard deduction elements. And that goes all the way back to World War II, when wages were frozen and companies invented benefits as a way to entice labor when they couldn't pay more. It's an 80-year-long fiasco that has been going on, but that's a whole other video to talk about. But yeah, this does not address payroll taxes, because if it were to address payroll taxes, Social Security would collapse overnight. So you have to remember, where we are in the Social Security story is that current Social Security taxes do not pay for current Social Security benefits. Okay. So the people receiving Social Security income are not fully supported by the people who are paying in Social Security tax. The difference is made up by the fact that over the history from 1936 or whatever it was up to 2010-ish, the surplus of Social Security taxes, when it did cover all the benefits, were Congress took that money, spent it, but they gave the Social Security Department an IOU in the form of a treasury bond, a special treasury bond. And so the Social Security Department has been cashing in those treasury bonds ever since the tax revenue became insufficient to pay out the benefits. And they've been drawing down that stockpile. And every year they release a new report, the trustees report. And every year they say, okay, in 2033, and the year shifts a little bit here and there, depending on demographic projections and all this kind of stuff. But we are roughly 8 years away at current projections from running out of those bonds. And at that point, the Social Security tax revenue will not be enough to pay for Social Security benefits, and either taxes need to go up, benefits need to be cut, or a combination. Those are the only options. That's where we are on the Social Security story. So if the people earning $150,000 or less were opted out and didn't have to pay into Social Security anymore, then that 8-year timeline would disappear. And it would be immediately that the Social Security benefit recipients would not have there wouldn't be any money in the fund in order to pay those people. And so something would need to be done. So clearly that's not going to be part of this whole story. And when you look at it from both the employee and the employer side of things, the Social Security tax and Medicare tax is roughly equal to the amount of income tax that people in these brackets pay. So you got to keep that in mind. So you're earning $30 an hour, let's say, but really your employer is paying $34 an hour for all your stuff, your employer taxes, unemployment insurance, all this kind of stuff. So really you want to think about your earning potential as that 34 number instead of the 30. And of the 34, you have all these deductions and all those taxes. Those are going to remain the same. And then the income tax portion that was also deducted, it might go away, right? That's what we're talking about. I want to clear up that key misconception, right? So it doesn't mean you're going to get your whole paycheck. That's just not on the table. But people would end up taking more home. So that's a positive. And so I just want people to understand what it is that we're talking about here and understand that, okay, 84% of the people that would be affected by this kind of proposal are paying in 18% of the income tax. And that reduction in income tax revenue could be made up for with DOGE spending cuts. However, does that actually get us towards the goal of reducing the deficit and reducing the debt? Maybe not. Depends on the numbers involved and depends on how real these cuts end up being in light of the fact that we have this continuing resolution that was just passed and is being funded at the same levels that was being funded the year before. We'll see how it all shakes out, but I'll be sure to keep you updated. And if you're seeing this, be sure to check out our live streams every Tuesday night, and you can ask questions live and we'll answer whatever your questions are. If you want more details, check out the links in the post. I put links to all the data and then you can see everything for yourself, but that's what we're looking at for now. So see you Tuesday.